I'm here with Dan Kelly from Viola Private Wealth. Dan is an expert on all things investing. He works for a major financial advice firm. Dan, I want to know, what is one thing the ultra wealthy are doing that the punters should start doing, particularly in 2026?
Think in long time frames. So our clients, and it's just typical of ultra high net worth and high net worth clients, they think in decades and not months. So they're not necessarily chasing short-term opportunities to make quick money over 3 or 6 months, which we see a lot of first-time investors trying to make quick money on the stock market, right?
Is there no such thing as like an easy win then?
You sometimes get lucky with a quick win, but really, professional investors and those that are really good at compounding money are trying to do it over 10, 20, 30, 40 years and not necessarily trying to make a quick buck on the markets.
Okay, is there anything else that you think the ultra wealthy are doing that the rest of us should really consider?
Yeah, they're not afraid to pay fees where it makes sense. And so I think inexperienced investors are typically quite fee aversive. And so they'll look at the fee that a manager's charging and make a decision not to invest based on that. Our clients are happy to pay fees where the net of fees opportunity is significant. And with a lot of the investing that we do, it's in private markets. So asset classes like private equity, venture capital, infrastructure. Really, the ticket to the game is paying management fees and performance fees, but it's the net of fees return that you should focus on.
Okay, what's one piece of advice you have for investors in 2026? It's obviously been a really volatile year this year. What do they need to get right to be successful over the year ahead?
It has been a volatile year, but most of them are, is the reality. If you look back at the last 5 years, we've had a lot going on. So it's par for the course, really. I would say investors really need to control their emotions. And so EQ is sometimes more important than IQ with investing, and realize that, controlling their own decision making, and sometimes, the best course of action is to do nothing.